Hello, everyone. I think at this point it is time for us to start our session. My name is Kurt van Dender. I would like to welcome you to this session on advancing sustainable development through energy tax and subsidy reform. Briefly introducing myself. Kurt van Dender, I lead the tax and environment team at the Center for Tax Policy and Administration of the OECD. I will be speaking today, but I will be speaking on behalf of the team. I mentioned in particular Astrid Tricot, Jonas Stoic, and Kostas Theodoropoulos, who are very closely involved with some of the work that I will be presenting, actually all of the work that I will be presenting, but I will not be presenting all results in detail. The structure of this session is actually quite simple. So I will give a presentation, a bit of an overview of what we're doing and a look ahead. Pascal Saint-Amand in his introductory remarks already referred to the inclusive framework on carbon pricing that is currently being started. And at the end of my talk, I will be referring to that a little bit as well. You should feel free to please put questions in the chat, and then there will be time after my presentation to ask questions as well. So at that point, we will ask you to raise your hand if you would like to intervene. At this point, I think I should start sharing my screen, see that there is a presentation to accompany my remarks. In the assumption that you can see that, I will now start giving that presentation. Okay, so advancing sustainable development through energy taxation and subsidy reform is the broad topic for the next hour that we have to discuss these issues. This work takes place at the Tax and Environment team of the Center for Tax Policy and Administration. Several people doing lots of work there. But at the start of my remarks, I would like to thank the donors for helping us do the work that we actually undertake. The work we do is, let's say, typical OECD work. Lots of data collection with particular attention to trying to ensure that data are systematic, of high quality, and can be compared across countries. That is always a very labor-intensive and therefore resource-intensive undertaking. And it is so in particular in the area that we work on in energy taxation, carbon pricing, because the data and the competencies within countries are quite fragmented. So there's a lot of work involved in bringing the data together, putting them in a format that ensures comparability and therefore extract messages in a way that can be compared across countries. So very grateful to the donors on the screen here to help us do that and to actually help us build expertise and give some continuity to this exercise, which is quite important. It's not something that you can do on and off. You really have to build expertise to be able to continue doing the work here. Outline of my remarks. I will first talk a little bit about how we approach this work and why we do it. Then I will give an overview of findings and then go to recent developments and a look ahead. So Pascal mentioned, again, inclusive framework on carbon pricing. That's a recent development that I will refer to a little bit. And then there will be time for questions and answers and discussion. So again, don't hesitate, please, to put questions in the chat or at the end of my remarks, raise your hand and we will keep track of that and give you the floor. Okay, so that's the outline. Let's start with the approach and motivation. If you talk about energy taxation, if you talk about fossil fuel subsidies, if you talk about carbon pricing, of course, there's a quite direct and important link with climate policy. The climate policy context in the present situation is sort of summarized on this slide. We have in black on the figure on the left-hand side, we have the historical path of greenhouse gas emissions, CO2 emissions. We have a trajectory going forward where we were going and what the announced pledges in COP26, so the most recent conference of parties under the UNFCCC, if all the pledges which were made there are actually translated into policies and attained, then we would follow the yellow trajectory. The yellow trajectory is better than the red one, but it is not quite the green one. And the green one is the one where we aim to go, which is to say net zero emissions by around 2050. So ambitions are increasing. That was a big result of COP26, but we do not see that these pledges at this point are consistent with the goal of the Paris Agreement, net zero. Also, in addition, pledges are one thing, but we don't really see at this point the full translation of these pledges into policy actions. So near-term policy actions remain insufficient. And they're also not well coordinated across countries. So the coordination of climate mitigation policies remains insufficient. Risks of negative spillovers means risks of carbon leakage. So more stringent climate policy in one part of the world. If other parts of the world have less stringent policies, what could happen is that carbon-intensive activities move from the places with stringent policies to places with less stringent policies, and the ultimate emissions effect might not be as strong as you would have hoped. So that's a coordination issue which is increasingly being looked at and addressed to some actions that we will come back to at the end. So to achieve global net zero by 2050, we need a comprehensive set of better coordinated climate plans. In such policy settings, you will use all kinds of instruments. I mean, the complexity of the climate challenge is such that you need all kinds of instruments, regulations, support for research and development, standards, you need all these kinds of things. But if you want to be effective, and certainly if you want to be cost efficient, you will also need carbon pricing. So carbon pricing is part of the policy mix. Since energy emissions are such a big part of the climate policy challenge, energy taxes, fossil fuel subsidies, carbon prices are a center part of the debate on effective climate mitigation policies. So it's one part of the answer. It's not the only answer, but it's the one that we zoom in on. So the motivation for us to look at energy taxes, fossil fuel subsidies, and carbon pricing is partly climate, to a significant extent climate. But carbon pricing, energy taxation can help us reduce greenhouse gas emissions. It can also help us attain other very important policy goals. What policy goals can we mention? Well, some of the principal ones are mentioned on this slide here. Energy use is responsible for greenhouse gas emissions. It is also responsible for local pollution. So air pollution with huge public health costs in several countries. Transport, so transport emissions, industry emissions, power production emissions, all contribute to local air pollution, and the damages in terms of years of lives lost and of reduced health are quite significant and are a policy objective in themselves. So climate, yes, but also let's say local pollution impacts, which if you can address them will have immediate benefits, right? If you can reduce local pollution, the benefits are immediate and they are local. This is quite different, of course, from the climate challenge, where we are investing mainly for with the idea of reducing future costs, whereas with local pollution we can address current damages in our societies. So that's important. Another important feature, and actually if you look at the history of energy taxation, this is probably the main motivation of why energy taxes have been used, is that they raise public revenue. In OECD countries, the revenues from, in particular, road transport fuel taxes are quite significant, more than 2% of GDP in a range of countries. So energy taxes, apart from having climate, environment, public health functions, also have a domestic resource mobilization function, which is always important, but which has been brought to the fore even more in the wake of the pandemic, as the need for resource mobilization is being strengthened even more than it was present already. So that's an important objective as well. So when we think about fossil fuel subsidies, energy taxes, carbon pricing, climate, local pollution, domestic resource mobilization, since when we tax energy or price carbon, we are basically putting prices on consumption patterns. And this can help to reduce informality, because these consumption patterns also occur in the informal sector. So therefore, if you increase the prices there, the benefits of going informal, let's say, are being diminished. So that's a little bit of the scope of reasons why we are interested in looking at taxes, carbon prices, fossil fuel subsidies in the context of developing and emerging economies. You can link that to the Sustainable Development Goals, and they're listed on this slide. 3.7, so 3, health and well-being, 7, affordable and clean energy, reduced inequalities, sustainable cities and communities, responsible consumption and production, and climate action. So there's a broad range, broad set of SDGs that directly relate to the work that we're doing here. The work that we're doing here was started a couple of years ago with the first output last year, which you see mentioned on the slide here. So it's called Taxing Energy Use for Sustainable Development, and the link is on the slide. And what this is really is let's say, typical OECD work, where we take stock of what countries are doing today with the use of energy taxes, fossil fuel subsidies, and carbon prices. And more specifically, in the work that we did, so the work which is in that publication, of which you saw the cover on the previous slide, that work focuses on 15 countries. We're currently in the process of extending that country coverage, and are planning to publish that extension after the summer, in September more specifically. But the first publication focused on 15 countries, which were mostly low-income countries that you see depicted on this slide. What did we do for these countries? We looked at fossil fuel excise taxes that these countries use. We looked at electricity excise taxes, and we looked at fossil fuel and electricity subsidies. In relation to fossil fuel and electricity subsidies, we looked at those subsidies that directly affect effective tax rates or effective carbon rates. So, for example, reduced excise rates on fuels for industrial production, or tax exemptions for kerosene. These are included, these forms of fossil fuel subsidies are included. We also include measures that have an indirect effect on the carbon price, the implicit carbon price. For example, if they have an effect on energy prices for domestic consumption, so budgetary transfers and government support that results in energy being provided below costs, these forms of subsidies are included. That's not all fossil fuel subsidies. There is a set of fossil fuel subsidies that relate mainly to production factors, so producer subsidies, and these usually are not included in our coverage here. They are included in the OECD's fossil fuel subsidy inventory, but that's a different product from the one that I'm talking about here. So that's what we do. 15 countries looking at broadly, in one word, the current profile of energy pricing in these countries, energy pricing as it results from subsidies and taxes. So that's the scope of the work. What do we observe? What are some of the main findings? Well, I mean, the main result can relatively easily be summarized as follows, which is that the bulk of energy-related CO2 emissions is subject to very low carbon prices. And it's summarized in those charts that you see, one for these 15 countries, which are listed at the bottom of the slide. So the 15 developing and emerging economies, and then compared to the OECD on the right-hand side of the slide. We show the share of energy-related carbon emissions that is priced below 30 euros per ton of CO2. That is a benchmark. Of this benchmark. In very general terms, we have been using 30 euros as a benchmark to say, if you really think that energy taxation, carbon pricing, fossil fuel subsidy reform is going to play a key role in climate policy, so in reducing emissions, then you probably would need prices of at least 30 euros per ton to start having meaningful impacts. That's the justification of this 30 euros per ton of CO2 benchmark. But you know, this is not set in stone. This can be discussed. It is a benchmark to kind of hold performance against. In the selected countries, so these 15 countries, 94% of energy-related carbon emissions face a price from taxes and subsidies combined that is less than 30 euros per ton. So again, if you think that these instruments should play a key role in climate policy, pollution, and also domestic resource mobilization, then you probably want to start looking closely at these policies and look for options to reform them. The selected countries profile is different from the OECD profile in the sense that also in the OECD, the large majority of emissions are priced at less than 30 euros per ton of CO2. But that is not different. But nevertheless, there is a bigger share of CO2 emissions in the OECD where the price currently exceeds 30 euros per ton of CO2. So the highlight is that these prices are not very high if you consider them from a climate and pollution policy point of view. So that's the headline result. It's important to clarify our methodology in doing that, because we take a broad view of carbon pricing. What we actually do, as said before, we look at fuel excise taxes, we look at a subset of fossil fuel subsidies, namely as far as they are directly relevant to energy prices. And we translate these taxes into CO2 equivalent. This is not hard to do. If you know the carbon content of fuels, you can translate a fuel excise tax into a tax per ton of CO2. Right? So that's the exercise that we undertake, and I will come back to that a little bit in a couple of minutes. The important thing is that we take a broad view of carbon pricing. We look at what we call effective carbon rates. Effective carbon rates consist of three components: fuel excise, as mentioned, fuel subsidies, as mentioned, but also carbon taxes and emission permit prices. I emphasize this because this is sort of an economic definition that we use. We look at the result. We look at the impact that these four components, so the emission permit price from a tradable permit system, the carbon tax, fuel excise tax, and the fuel subsidy, we look at the combined effect of these four policies in the effective carbon rate, which is expressed in euros per ton of CO2. So we don't look at policy intention. If you looked at policy intention only, then you would look at emission permit prices and at carbon taxes, because these have been introduced with the explicit motivation of reducing CO2 emissions. We think that fuel excise taxes and fuel subsidies don't necessarily have the policy intention of pricing carbon, but the result is nevertheless the same because, as just mentioned, and as I will illustrate, you can translate a fuel excise tax quite easily into a tax rate per ton of CO2 and actually basically describe the same tax. So the policy result is to price carbon. The policy intention is to price carbon. You combine those two sets of policy instruments and you have the effective carbon rate. That's a broad economic definition of carbon pricing. It is broader than what other organizations in this area of work tend to use. I just mentioned that to clarify. For example, if you look at the World Bank's State and Trends of Carbon Pricing publication, which is an excellent publication that allows us to keep track of what's happening in the carbon pricing area, but carbon pricing area only in as far as emission permit prices and carbon taxes are concerned. So they don't look at fuel excise taxes and at fuel subsidies, just to keep the clarity in how the different types of products in this area of work compare. We take a broad view. Take the broad view, we nevertheless have the finding on the previous slide that the large majority of emissions is priced at much less than 30 euros per ton of CO2. So even keeping account, taking account of fuel excise taxes in this work. So that's a key result, which applies to the OECD, which applies more strongly to the 15 developing and emerging economies that we're looking at. Another finding where we also compare OECD and these 15 countries is that the effective carbon prices differ very strongly across fuels. So you see the main fuels listed here: coal, fuel oil, diesel, kerosene, gasoline, LPG, and natural gas. Two things that stand out again are on average higher rates in the OECD than in our taxing energy use for sustainable development countries. What also stands out is that rates on diesel and gasoline are on average significantly higher than the rates in other sectors. And this is mainly because diesel and gasoline are principally road transport fuels, and road transport fuels tend to be taxed much more highly through fuel excise taxes than other fuels and fuels in other sectors. So almost everywhere, if you look at the pattern of these effective carbon prices resulting from taxes on energy use and carbon prices and permit prices, you find higher rates in the road transport sector than in other sectors of the economy. Diesel and gasoline taxed relatively highly, coal and other fossil fuels taxed at on average very low rates. Coal is particularly carbon intensive. Coal is also particularly damaging to the environment and public health. So from a environment and climate point of view, there really is no rationale for these very low taxes on coal. And it tends to come out of this analysis and also other work in this area, that a prime area for reform, if you want to make progress with using fiscal approaches to reduce air pollution and climate problems, that you would want to look at the taxation or the pricing of coal. So that's a strong result here too. So low rates on average and rates that differ quite a bit across fuels. So that's one side of the question, where we look at rates on average low, different between fuels. That is kind of interesting to develop a view on how current pricing patterns, taxation patterns, subsidy patterns are aligned with the potential use of these instruments from an environmental and climate point of view. And it's very clear in these countries that we looked at in taxing energy use for sustainable development, that there is a lot of scope for progress. The other perspective that we can take relates to domestic resource mobilization, raising revenue through the taxation energy use and through the reform of fossil fuel subsidies as they exist in different parts of the world. And this slide that you see here sort of summarizes the results from the work that was done from this revenue potential point of view. So on average, if we removed fossil fuel subsidies, and if we also priced energy use, the emissions from energy use, CO2 emissions from energy use at 30 euros per ton of CO2, where that is presently not the case, then there would be revenue gains of, on average, 1% of GDP. Is 1% of GDP a lot from a public finance point of view? Well, I think we can probably agree that this is not a revolution of public finances, but that nevertheless, it is clear that a reform of subsidies and energy taxation could make a significant contribution to domestic resource mobilization. So it's not to be ignored. It is at the same time not a drastic transformation of the revenue raising challenges that these countries face. 1% on average. The slide is clear. There are very large differences across countries. Very large differences across countries. We have Egypt here. I should say, and I will come back to it, that since the work we did here, which is I think for 2018, Egypt has implemented significant reforms on its fossil fuel subsidies already. So the picture in that sense needs an update. We will be updating it in our work that we will release after the summer. But nevertheless, very large differences across countries. Some countries where subsidies are currently very high, and therefore reducing them would be quite significant from a public finance point of view. Some countries where subsidies are not high, but nevertheless, the current tax rates are well below 30 euros per ton of CO2. So raising it to that level would actually raise significant amounts of revenue. In some cases, not in all cases. So what explains these differences between the countries? Well, some countries, even if they're not at 30 euros per ton for all their energy use, they nevertheless have significant prices in parts of their energy base already. So lifting it to 30 euros per ton of CO2 universally adds some revenue, but it's not such a big change. Also, the energy mix differs between countries. The carbon intensity of energy use is very different. For example, some countries do not use coal at present, and they're, introducing a carbon tax or an energy tax equivalent to 30 euros per ton of CO2 would probably not raise that much revenue, but it would nevertheless help in ensuring that the development of the carbon intensity of the energy mix over time remains relatively low on carbon. And that, of course, is a desirable development from a climate point of view. Okay, so we speak about energy taxation, fossil fuel subsidy reform from a climate point of view, from an environment and public health point of view. We see scope for benefits. We see the public finance interest of this work as well. But of course, the political economy of such reforms is very complicated. As we all know, and there are actually a couple of countries on this slide, for example, Ecuador, where these reforms in the recent past have led to serious pushback. So the political economy challenges of this work are not to be underestimated. There is much hope for revenue use strategies to be able to improve the acceptance, the public acceptance of these kinds of reforms, in the sense that if you take part or a significant part of the revenues, as sketched at this slide, on average 1% of GDP, if you take a portion of that revenue, you could probably do a lot to avoid adverse impacts on energy affordability and at increasing inequality. Nevertheless, this is not easy to design. Certainly where social expenditure systems are less developed, this is not easy to design. And it's even less easy to communicate, but because I mean, in any case, if you're going to be increasing energy prices, the perception of this being just another tax will probably rise, and it's a quite difficult public communication challenge to modify that picture. But nevertheless, worth considering in close detail, because the climate and public health impacts are there. If you're not going to be using prices, you probably need to use different instruments, and these different instruments are also going to impose costs on groups of society. They may be less tangible, these costs, but they nevertheless exist. So it's important to keep considering price-based policies, tax-based policies. And one advantage that they have, again, is that, yes, there are the climate and public health benefits. Also, they raise revenue, and this revenue is available to design policy reforms that can help influence the distributional and energy affordability impacts of the reforms. So that's a summary of some of the main findings of the work. You can look at the publication and at the data to find more detail. There are country notes online as well. But this is the work that was released last year, and as mentioned, we are now in the process of extending that work, updating that work, and extending it to a broader set of countries. To see the results of that, we should come back and see after summer. By the way, probably useful to mention that in this update after summer, which we refer to as Taxing Energy Use 2022 for the moment, that there we will combine the analysis for all the countries that we cover. So we will be covering 70 countries at least in total, OECD, G20, and then a larger selection of developing and emerging economies. And they will all be analyzed in the one single publication. So that's what's coming. As I mentioned before, the question arises, you mentioned 30 euros per ton of CO2. That's maybe a somewhat abstract number. We know the carbon content of fuels, so we know that we can translate 30 euros per ton of CO2 into a per volume basis or per weight basis for fuels. And this slide gives you some of these conversions. So we take the 30 euros and we translate it into the equivalent of that 30 euros per ton of CO2 in terms of volume or weight units for different fuels. So for coal, on average for coal, 6.2 cents per kilogram. Now, if you take 6.2 cents per kilogram and you compare that to the current average price, average tax on coal, which, as we saw in an earlier slide, is actually close to zero in most places, that's a huge increase that would be implemented by moving to 30 euros per ton of CO2. For diesel, gasoline, 7 cents per liter. These are sizable increases. I mean, in most OECD countries, actually, I shouldn't say most, in many European OECD countries, the increase implied by adding 30 euros per ton of CO2 is noticeable, but not that large compared to the already high tax levels. Of course, in countries where at present fuel taxes in road transport are smaller, 8 cents per liter for diesel is a significant increase. But just to make it a little bit concrete. A useful remark in that context perhaps is also, since it is so easy, I mean, it's really just a simple conversion to translate euro 30 per ton of CO2 into these units that you see on the slide. These units that you see on the slide are the units in which excise taxes in countries usually are defined, which means that you could implement a carbon price, a carbon tax, by modifying these excise taxes on fuels as they exist already. So carbon prices, carbon taxation in that sense is not that complicated. It is a modification of a type of taxes that in many places already exists. So it's a reform of a fuel excise tax system with a climate objective in mind, perhaps also with a public health, air pollution objective in mind. You can start looking at things that already are in place and how you should be modifying them. I emphasize this because there is a notion very often that carbon pricing is very complicated, is administratively exceedingly complex. Well, if you look at it through this lens here, as a modification of fuel excise taxes, that is actually not really necessarily the case at all. What is complicated are emissions trading systems. For example, the European emissions trading system, California has an emissions trading system, Chile has introduced one, there are others. These are indeed very difficult systems to design because you're in essence creating a market in a place where you currently don't have one yet. You're creating a market for CO2 permits, which have to become tradable, which means you need to measure emissions of the sources of CO2 emissions that are in scope of your emissions trading system. You need to measure emissions, you need to report, you need to verify. This indeed is quite challenging administratively. So if you want a simpler, quicker way to introducing policy signals, price-based policy signals to put a price on carbon, the suggestion would be to go through the carbon tax route and to focus on fuel excise taxes. Okay, so that was one point there. I think so that's a quick overview. Again, much more detail in the publication, and you should feel free to contact the team. I will show the email addresses at the end if you want more detail on any of the things that I've been talking about. Recent developments and a look ahead. Well, recent developments in the countries that were covered in this taxing energy use for sustainable publication that I spoke about. Some of the countries, I mean, these issues, fossil fuel subsidy reform, energy tax reform, are increasingly being addressed in these countries that we looked at. Egypt has successfully phased out most of the fossil fuel subsidies, actually, since we did that work for 2018, with a big impact on public finances. And it's clear, of course, that the public finance rationale in these cases is quite important. Philippines has undertaken a major tax reform with significant increases of fuel excise tax rates. Uruguay, a carbon tax was introduced in 2022, a relatively narrow base, but a significant rate, as you've seen. Kenya, we see discussion of potentially introducing an emissions trading system. Morocco, well, there is concrete progress on a carbon tax, although there's not a concrete timetable at this point, but progress is being made. I referred to Ecuador briefly already. Fossil fuels subsidy reform, very tricky because of the social repercussions that potentially occur. So combining your reform of the subsidies themselves with some kind of program will be very important. But Ecuador is adapting that reform proposal. So lots of action in these countries. Our message is this action may not necessarily always be initiated from a climate or pollution motivation, but they can be combined. Right? I mean, we can to make sure that not only the public finance dimension is better served, but also the climate and air pollution dimension is better served keeping in mind always the social repercussions. Is happening in terms of the work that we do? Well, I've referred to the upgrade and update that we're planning for September of this year already. Taxing energy use, OECD and G20 was last updated in 2019. We have since published effective carbon rates, where we also look at emissions trading systems. 2021, we did an update for this year, so looking at the COP26 context, which we called carbon pricing in times of COVID-19. In 2 words, that update showed quite significant progress with carbon pricing, either through emissions trading systems or to carbon taxes in several G20 countries, but not in all G20 countries. So this carbon pricing in times of COVID-19 focused on G20 alone, out of time constraints. That's all we have time for. We see lots of momentum in a subset of G20 countries, but not in all G20 countries. And that's actually a quite important observation for the international dialogue on these policies going forward. I've already spoken in some detail about taxing energies for sustainable development. And as said, in September, we will publish an update of taxing energy use effective carbon rates, where we look at more than 17 countries, OECD, G20, the 15 countries that were in the taxing energy use sustainable development. And then if all goes well, and we think it will, there will be 10 or more new countries added to that overview. In terms of the look forward, I think it's useful to talk about what happened in the context of the G20 finance track last year under Italy's presidency. As you know, Indonesia holds the presidency currently. Last year it was Italy. Italy, for the first time in the finance track, wanted to start a discussion among finance ministers and central bank governors on the role of tax policy in climate change. So how can tax policy more broadly the use of market-based instruments that we have been speaking about, how can it contribute to ambitious climate change policy? So Italy wanted to start a discussion in the finance track. It commissioned reports to the IMF and OECD. So we worked together to provide reports in April and October, always in advance of the finance ministers and central bank governors meetings. This supported the discussion. In 2 words, what came out of that discussion? Ministers were very clear that yes, carbon pricing, the use of fiscal instruments to put a price on pollution, if you want to put it in those terms, is very important, is potentially very powerful. Nevertheless, it is not a policy option that is easily accessible anywhere, and that is actually very hard to access for several countries within the G20 and certainly also beyond the G20. So a clear observation that pricing can play a role and should be encouraged to play a bigger role in climate policy, but that this will not happen overnight, and that meanwhile we need to start a dialogue, a multilateral dialogue, on how the different approaches that countries take can be compared. Countries use prices, other countries rely more on subsidies, yet others rely more on regulations, standards. I mean, they all use a combination of those, but the emphasis is very different across countries. What can you do to start comparing these countries? Why is this important to discuss that in the context of G20 and beyond the G20? This is important because we see, I mentioned it a couple of minutes ago, that the extent to which countries are making progress with ambitious climate policy, and in particular with the use of prices in that ambitious climate policy, there are large differences between countries. Ambitions differ, concrete policy implementations, the stringency of these policies, the shape of these policies, lots of differences across countries. And this creates a risk of spillovers. Spillovers, carbon leakage. I've referred to carbon leakage. A high carbon price in one place, a low carbon price in a different place. Might it be possible that producers move to the low price places and therefore do not reduce emissions as much as what was hoped? That's carbon leakage. Competitiveness is also an increasing concern. If firms in one part of the world face very high carbon costs, not in other parts of the world, it becomes more difficult to compete for those firms that face the high prices. These spillovers become increasingly in point of interest as the ambitions increase. We saw at the start, ambitions are increasing. We're not quite where we have to be yet, but there's significant progress, much more ambitious climate pledges, and increasingly these ambitious pledges are being translated into policy action as well. So we need to start addressing these potential spillovers. That was the message in the context of the G20. This creates a global coordination challenges, diverse policies, I mentioned them, technology support, regulation, pricing. We need credible metrics for comparing these policies. Why do we need that? Well, this quote is actually from the OECD Secretary General, Matthias Cormann. The challenge is to ensure that the level of ambition and effort in individual jurisdictions can be lifted to the level required to reach global net zero by 2050, while maintaining to the greatest extent possible a level playing field, avoiding counterproductive trade distortions and carbon leakage. So as mitigation policy becomes more ambitious, we need to look at leakage and at potential trade distortions. Pascal, in his opening video, referred to the new initiative, the Inclusive Framework on Carbon Pricing. This inclusive framework on carbon pricing has the ambition of precisely addressing these challenges, which are mentioned on this slide. So since the high-level tax policy symposium, which I referred to, where ministers and G20 ministers discussed, the OECD has started exploring in discussion with countries, not just OECD countries, going well beyond the OECD countries, has started discussing how such a dialogue on a global coordination challenge could be shaped. So what process could be put in place? Inclusive framework type of approaches could be used as a model. So the inclusive framework on BEPS could be an inspiration, although the policy challenges are different. And it is also clear that there is an analytical component to this work, in the sense that if you want to start comparing policy approaches, mitigation policy approaches, the evidence, the stock take, the register of policies that you need to do that is actually currently not in place. There are elements of that, but it's not complete enough. So that's one part of the work that would need to be done if you want these credible metrics. And the other part of the work that needs to be done is then, once you have the data, you need methods to compare very diverse policies. How do you compare a price-based policy to a regulation-based policy? There are elements of answers in economic literature, but this is not an easy question to address in an operational sense. So that's where the discussion is headed at this point. This, of course, relates to concrete initiatives like the European Union's border carbon adjustment mechanism, the German suggestion for carbon clubs, which is also mentioned in the context of the G7. These kinds of initiatives would be informed by the kind of work that we have in mind at the OECD. And I will end my remarks here and now go to Q&A for discussion. Really up to you to intervene if you would like to. but here are some potential questions on the slide. And I also show the contacts if you want to get a touch of the work that we do with a focus on developing countries. These are the people that you should feel free to contact. You can, in general, contact the OECD Secretariat, and they will find the right people. So I will stop here and see if anyone would like to intervene, or whether there are questions that I should be addressing already. Okay, so I think there is someone that would like to intervene. And this is Mr. Kone from Mali. I think I will ask you to unmute yourself, and then please introduce yourself and ask your question, Mr. Kone. Seem to be having a difficulty unmuting. Okay, there seems to be a technical difficulty with unmuting from that first side. So maybe we can go to Mr. Christensen, who has also raised his hand.
Yes, thank you. I'm Martin Christensen, representing Oxfam. And it strikes me that we may deal with a double accounting if we include fuel excise taxes, as many of those are often introduced with the intention of compensating for other negative externalities, such as local air pollution and traffic noise and so forth. So also counting them in as addressing the externality of climate change seems to me to be double accounting. So what are your thoughts on that? Thank you.
Well, I mean, this is, of course, a question that we have thought about quite a bit. I think in general, what you want to do, if you want to look at fuel excise taxes from let's say, an externality pricing approach, is that you want to look at the set of externalities which are plausibly addressed by a fuel tax. And there the usual list is, indeed, you mentioned air pollution, congestion is sometimes also included, although it's less direct. And CO2 is actually also always included. So it's the list of externalities that can be addressed by a fuel tax: congestion indirectly, air pollution actually also indirectly, because air pollution differs depending on where the fuel is being combusted, whether that's in a dense area or in a not so dense rural area. It makes a lot of difference for the marginal external cost of air pollution. Whereas for CO2 emissions, the connection between the externality and fuel combustion is actually direct. There is a fixed amount of CO2 released when you burn a liter of gasoline. There is a somewhat larger fixed amount of CO2 emissions released if you combust a liter of diesel. So it's perfectly valid to consider fuel taxes as an instrument to reflect the external cost of climate change, of CO2 emissions. So there's not an issue of double counting there. I do agree with that you could approach the exercise a little bit differently from what we do, which would be to compare the current fuel tax against the full range of relevant external costs. That's a valid exercise in principle, one which is much more difficult to do and involves much more analysis and assumptions. So we have not done that. The question we ask is, if you consider fuel taxes from a climate point of view only, if you consider all energy taxes from a climate point of view only, how do they look? Are they, from that point of view alone, are they well designed? And you can already draw the conclusion, which I did draw, that usually it's not the case that they're well designed from that point of view. So, I mean, I agree again that there's a specific presentational choice that is made here, which is different from comparing the tax level to the full range of external costs, but it is certainly a valid approach, I would argue. Okay, I'm going to ask Mr. Kone to unmute again, if that would be possible. Still does not seem to function. Yeah, we have a couple of minutes, so if there's anyone else that would like to intervene, that we can do. Okay. Samira Khan, if you could unmute yourself and please ask your question.
Hi, good afternoon. I did post the question in the chat, but it seems like there's a technical problem. So my name is Samira Khan. I'm from the African Tax Administration Forum. And I just wanted to find out, if countries have to implement these reforms, how do we ensure that the revenue that's collected from these taxes is used to transition to renewable sources of energy, reducing greenhouse emissions and protecting the local environment, more especially in developing African countries?
Okay, this is a very important question. I mean, I spoke about revenue use a little bit, and if you look at our report, we put, you know, there's a significant revenue potential. If we raise that revenue, it can be put to different forms of usage. The one that you mentioned, which is in essence to reserve the revenues from energy-based taxes for, let's say, climate and environment-related spending, that's a choice that countries can make, a valid choice, which some countries do make, at least for part of the revenues. It's not the choice that all countries make. If you look at fuel excise tax revenue in particular, in a lot of places, this becomes part of general revenue. So I guess my answer is that it is a decision at the country level to first figure out what the best form of revenue use is. The one that you seem to prefer might work in a couple of places, but it might not be the best choice for all countries. And best here is both a political question and one of economic and social benefits, right? But it certainly is possible to reserve part of the revenues for green spending, to give it that name. Does that work in terms of improving public support? That really depends on the country. If your constituencies are largely in favor of very active climate policy, it might work, but that is not the case everywhere. So that's the answer I would offer at this point.
Thank you.
Thank you for the question. Okay, I think we are running out of time in the sense that we should stick to the schedule very punctually as we need to move to the next session. So I would like to thank everyone for in large numbers and for the questions. As said, if you have further questions that you would like to ask, do not hesitate to get in touch. We are continuing this work. We are deepening this work. So your feedback will be extremely useful to us. I know the organizers now would like to come in. seems like that is not the case. So in that case, I will end this session here and thank everyone for their attention and wish you a pleasant rest of the day, evening, or night, depending on where you are. Thank you very much.